Hi everybody, welcome to another update on the stock screener. Somebody wanted me to talk about Prospera Energy, even though I'm not in oil producers right now. Just to give an update, I don't have financials yet, so it's all a guessing game. Okay, so let's talk about it. So Prospera Energy has not done well. It's down almost in half from a year ago. So what is going on? The oil price has actually been stable, but Prospera Energy has managed to go down. So what is going on? Let's look at the data first. What has happened? Shares outstanding. You can see that here. We had shares outstanding of 200 million over a year ago. Now we are at 400 million and probably fully diluted at 500 million. So you can see that the shares outstanding are increasing at a very rapid pace. It has doubled and is even going to triple, I think, because they need to finance, and there are a lot of fully warrants that can be exercised at some point. So probably it's going to triple the shares outstanding. Now look at the production. Production is actually just flat. It has not increased. This is the data. This is the oil production, and it has not increased. But the shares outstanding have doubled and are going to triple. This is the total BOE. This is the oil production. They had a dip here in the winter, and this is the gas. It's pretty stable. So basically the oil is the one that fluctuates. The percentage of oil is currently around 60%. It could go back to 70%. Gas is a bit lower. So the ratio is actually pretty okay. A lot of oil percentage. Then capacity of production is increasing, that's good, but the actual production is down. So they are not using the full capacity. Not sure why, maybe they are drilling or optimizing, so they're not using the full capacity. We could take a look at the actual flow rates. So here they have added the horizontal wells, but you can also see that these horizontal wells are taking some of the other production. They're siphoning some of the vertical wells. Looks like that. Otherwise, this would be on top of this. But in this case, the horizontal wells are taking production from the vertical wells somehow. So that's why the production is not rising that much, because they're just taking the oil from the other wells. Now, they also gave us an update on production. Production has actually gone back up a bit, but it's still around 1,000, 1,200 BOEs. So it's not like it's at 2,000 or something like that. It's still at 1,000, around that level. So we'll see. Going to our valuation chart. So these were the numbers that I estimated. 1,200, that's exactly the production that we have right now at 1,200, 1,300. times 31, which is the working interest. For this year, they are saying that they will go to 2,200, even 5,000 with some acquisitions, but we are still at 1,200. So I don't even know if they can achieve this. Talking is not the same as reality. We still need to drill it out. 2,200, can they get to there? I'm not sure. They have said a lot, but not delivered yet. If they can deliver it, if they can get to 2,200, okay, then we have this valuation, the orange line, at 2,200 production for this year. Current share price 0.08. We are at 85 Canadian dollars heavy oil. Yeah, with some gas for Prospera Energy, that's why it's 85. So take 85 here, and we are still overvalued at this oil price. So enterprise value 77. Take into account that they do have some ARO, so you need to add the 35 to that. So that means the enterprise value is around 77, 80 million. So overvalued. The value is at 40 million currently for a 5 times free cash flow basis. So would I buy it? Not yet. Either oil needs to go above 100, and then it would be good for Prospera, or their production needs to go up. This line here, that's 2025, that's 3,000 production BOEs. If they can get to 3,000, then yes, then we have upside. Okay. And this is using these costs, 28 Canadian per barrel costs. I think they are currently still above $30 costs because their production is so low. So yeah, still no upside yet. We haven't even attained this production level. So we are actually even on the blue chart still. The blue chart is 1,300. So that's the current production. We are currently here, which means no upsides, only downsides. You can see here, no cash flow, okay? And that's because they don't have a lot of production. The costs are still very high. Let's say even if we use 32, doesn't matter, it's still below zero. So they need financing. That's what I think. They need to get financed, and they need to drill more to increase the production. That's what the problem is right now. It's still not at a point where they make good profits. It costs a lot to drill, and production is not going up. It should already be at 2,000, 3,000. It's not at 2,000, 3,000. It's still at the same level as 2 years ago, right? So they still need to get finance to drill more because this is not enough to make money. That's the problem that I have. These are horizontal wells, okay, lower costs, but is it good enough? I don't think so because share price is not rising. And the oil price is also not at $100 yet. So yeah, costs are, and these are the costs actually. Right hand side, cost per barrel, still at around 40, 30, 40 per barrel. That's a very high cost. And this is September, right? It's not below 30 cost per barrel yet. So that's a problem. Costs are not coming down, even with higher production. You need these costs to come down to 30 level. It's not happening yet. This is the NPV chart. Yeah, oil is currently 85. So I could update it to 85. Looks impressive, but we're not there yet. Because this is using 1,500, 1,700, 2,000. Okay. But the costs, 30, 29, 28. We're not there yet. We're still only here. So if I use this 36 costs, which we are still at right now, then it's less profitable. So still needs 10 years to get your money back. Yeah, and of course, um, 36, but also the production is still at 1,500. Yeah, maximum 1,700. So I could do this. So this is the situation currently. It's not bad, but it's not good either. This is the enterprise value and the cash flows come in, but it's not good enough. Okay. Yeah, 1,300 costs, 88% working interest, capex 15 million, net income. Yeah. Costs are 36. Okay, so basically, if they can bring the production up, then this could be profitable, could be a profitable business. There is upside like this if they can bring the costs down and increase production like this. So this is 3,000. I'm not putting 10,000 in here anymore because that's not achievable. 2,000, 3,000 is maximum, I think. Maybe 5,000. But yeah, you can put any number in here. I don't think that the investors believe the guidance anymore. Okay, so it could be like this, could also be like below the blue line. Nobody knows. Nobody knows. So how do we actually analyze this? I don't know. The only thing that you can do is just keep watching the production numbers. Is the production going up compared to the shares outstanding? That's important because you can increase your production, but if the shares outstanding keep rising, then you will not have any upside because your market cap stays the same. So production can go up, share counts can also go up. So take that into account as well. So where will this go? I don't know. Probably not going up. They still need to do financing. They still need to drill. Drill results need to be good, and production needs to go up. Acquisitions cost money. So it doesn't look good, even with a high oil price. And you can see that here, using this orange line, even if oil goes here, there is not a lot of leverage. The leverage comes from production growth. Production growth like this, but we are not seeing it yet. We are not seeing it from here. We are not seeing it from here. Horizontal wells are just taking the vertical wells over. Yeah, this is the data, and think about it all you want. Because I'm not invested, I don't think I'm going to look at it much further. I'll see you next video. Bye.